Hi everyone, welcome back to Saheb Academy. Today in the second video of bonus and right issue chapter, we are going to solve two problems on bonus issue. But before going ahead with that, let me just show you what we have done in the first video of this chapter. See, in the first video of this chapter, we have discussed the entire concept, all the legal provisions, the accounting treatment, everything regarding bonus issue, right? First, we understood what is bonus issue, which means just converting reserves and surplus into equity share capital, shuffling of the net assets. There is no cash flow, nothing, no new thing is coming or going out from the company. No, it is just shuffling of the net assets. And then I told you there are two different types of bonus issues. Yeah, issuing fully paid up bonus shares to existing shareholders for free of cost. And then we have converting partly paid up shares into fully paid up, that is the bonus call, right? Two different types of bonus issue we have. And then I took an example of this, issuing fully paid up bonus shares. Yeah, and then I also explained you the effects of bonus issue, and then example of this converting partly paid up shares into fully paid, which is also really simple. And then we discuss sources for bonus issue. Yeah, from which source you can give the bonus issue according to the law. You have to learn that properly. You cannot just randomly decide from which reserves and surplus you are going to issue the bonus. All right, so we have two different types of bonus issue, issuing fully paid up bonus shares and converting partly paid up shares into fully paid up, the bonus call. So here, to issue fully paid up bonus shares, you can use CRR, securities premium realized in cash, capital reserve realized in cash, and then you can use free reserves. This is the sequence you have to follow. The sequence is very important. First priority goes to CRR, then SP in cash, CR in cash, and then free reserves in any order. Now here, for converting partly paid up shares into fully paid up, here you cannot use CRR, you cannot use securities premium. Yeah, wrong. You can only use capital reserve in cash and then free reserves. Okay, capital reserve in cash and then free reserves. And then couple of notes, revaluation reserve cannot be utilized for issue of bonus shares. And whenever the question is silent regarding the securities premium and capital reserve, whether they are realized or not realized in cash, then you have to always assume securities premium is realized in cash and capital reserve is not realized in cash. Okay, that's all. And then we started discussing the conditions for bonus issue, which I'm not going to get into right now because it will be a very lengthy video, right? So this is the provisions of the Companies Act, which are also very important from the theory perspective. Yeah, you have to have a proper understanding of this. And then we saw SEBI regulations, ICDR, issue of capital and disclosure requirements. Yeah, after the SEBI regulations, what did we do? After the SEBI regulations, see the SEBI regulations 295 also, regulation 295, completion of bonus issue. Okay, and then after this we saw the accounting treatment of bonus issue. Yeah, the journal entries. The journal entries are very simple. See, the accounting treatment is different depending upon the type of bonus issue. If it is issuing fully paid up bonus shares, then you have to pass two entries. Utilization of reserves. Yeah, you will use up the reserve by debiting them, and the value of that will go into bonus to equity shareholder, this dummy account, and then you will cancel this dummy account when you will issue the shares to the existing shareholders, and ultimately you will increase the share capital to equity share capital. Fine, these are the two journal entries for issuing fully paid up bonus shares. And then you have converting partly paid up shares into fully paid up, the bonus call. Here you have three journal entries. First, you will make the final call, share final call account debit to equity share capital. Capital has increased. Now how that capital has increased, you have to show that. It's really simple. It has increased because of the reserves. That's what happens in the bonus. Reserves get decreased and capital gets increased, right? So you have to decrease the reserves over here, and you have to follow the law properly. Here you cannot use CRR, you cannot use securities premium. You will only use capital reserve in cash and then free reserves. Okay, so you will use up the reserve and then transfer that value to this dummy account to bonus to shareholders, and then you have to adjust the final call. This final call account you have to cancel over here, and this bonus to equity shareholders will also get cancelled over here. Ultimately what happened? Reserves got decreased and capital got increased. Here also the same thing, reserves got decreased and capital got increased. Is it clear? Rest all the account gets cancelled. Fine, so those are the journal entries. And then for this issuing fully paid up bonus shares, you need an additional disclosure in the balance sheet. What you have to do is, in issued capital you have to write an extra line. For example, the capital is, let's just say 10 lakh, and out of that 1 lakh shares are bonus shares issued in the way of bonus. Then you have to write a line below, out of the above 1 lakh shares at face values, let's just say 10 rupees, 10 each were issued by way of bonus scheme. Is that clear? That's what a balance sheet disclosure you have to show. and the balance sheet effect will be what? You will decrease the reserve and you will increase the capital. That's all you have to do, because that's what happened in the bonus, right? And then we also discussed regarding this authorized capital adjustment. It can be there in some question. If subscribed and paid up capital is more than authorized capital after the bonus issue, it can happen now. So at that time, what you have to do is you have to increase the authorized capital. Either you can increase the authorized capital by the additional number of shares you need. Yeah, for example, let's just say issued and paid up capital is 1,40,000 shares and authorized capital is only 1 lakh shares. So it is exceeding. So what you can do is you have two options. Either increase this 1 lakh shares limit of authorized capital to 1,40,000, yeah, additional number of shares required, or what you can do is you can increase the authorized capital limit by the bonus issue, 60,000 shares. Yeah, 60,000 shares, the bonus issue. Is it clear? So this is what we discussed in the previous video, but of course we discussed that in very much detail and everything has been discussed properly. So please watch the first video if you don't know anything about this, right? So now let's get back to the second video and let's solve the problems and understand practically how to solve the problems of bonus issue. Now here we have our first problem, illustration 1 from the ICAI study material. Let's understand the question first. See here, following items appear in the trial balance of Bharat Limited, a listed company as on 31st March 2021. So here we have been given the details, but before that, let me just tell you one thing that will be confusing your mind later. Listed and unlisted company. See, understand here they have told you a listed company. Is that relevant to us? Yes, it's very relevant. Understand, listed company can only use reserves that are realized in cash. Yeah, they can use securities premium which is collected in cash, realized in cash. But an unlisted company which is not listed on any stock exchanges, that company can use securities premium which is not realized in cash. Okay, that is the difference, listed and unlisted. But normally, you know, the question will tell you whether it's a listed company or unlisted company and you can decide that. Okay, but for example, let's just say it's not mentioned. If it is not mentioned, then you will always assume that it's a listed company and you will not touch unrealized reserves. Is that clear? Simple. So now let's start the question. See here. Here in the details we have been given 40,000 equity shares of rupees 10 each, 4 lakh. Okay, that's the capital. And then CRR is there, capital redemption reserve of 55,000, and securities premium collected in cash 30,000. We can use this SP, right? Securities premium, because it's collected in cash. And even if the question is silent regarding this, you will assume it is collected in cash only. Is that clear? Yes. And then general reserve 1,05,000, and then you have profit and loss surplus, that is 50,000. And the company decided, see here, the company decided to issue to equity shareholders bonus shares at the rate of 1 share for every 4 shares held, right? Now you have to understand which type of bonus issue is this, first or second. This is the first, issuing fully paid up bonus shares to existing shareholders, right? So what is the ratio, the bonus scheme? The bonus scheme is 1 share for every 4 shares. If you have 4 shares, then 1 additional share free of cost will be given to you. Is that clear? Right. And then they are saying, for this purpose, it decided that there should be the minimum reduction in free reserves. Yes, this is a normal thing. It will always happen. There is a sequence that you have to follow now. There is a sequence to follow according to law. Issuing fully paid up bonus share, first you have to use CRR, then SP in cash, CR in cash, and then only you can use free reserves. So of course there will be a minimum reduction in free reserves, isn't it? Because this is the normal procedure. So it's not an adjustment or something. Okay, this line, it decided that there should be the minimum reduction in free reserves. It's not an adjustment, it's a routine procedure, normal only. Fine. Pass the necessary journal entries. Now how do you pass the journal entries? First we have to do a calculations, how many bonus shares we have to issue. Okay, so to find out the amount, so see here, existing shares are 40,000, and you all know bonus is given on existing shares only, not new shares. Okay, so see here, 40,000 existing shares are there. On this, what is the bonus ratio? 1 for every 4. 1 for every 4, right? See here, 1 for every 4, isn't it? 1 for every 4. So 1 divided by 4, that's equal to 10,000. So 10,000 shares will be given to the existing shareholders. So how will you pass the journal entries now? You all know 2 journal entries we have to pass. The first is announcement of bonus issue. When the bonus will be announced, you have to use up the reserve. From the accounting perspective, you have to decrease the reserves, and the value from these reserves you have to transfer to this dummy account called as bonus to equity shareholders account, which also comes under equity category, right? So reserves are falling means you have to what? Debit the reserves, right? It comes under equity category, capital category, equity category. So if reserves have to be decreased, then you have to debit them to decrease them. And then this also comes under equity category, bonus to equity shareholders. So value is going over there, so you have to credit that bonus to equity shareholders. So see the first entry in the module itself, it's really simple. We need how much? We need 10,000, right? 10,000, and the face value is rupees 10. It's fully paid up bonus shares now. So 10,000 into 10, that means 1 lakh. This much amount we need now. How much? 1 lakh. So reserves have to be decreased by 1 lakh in total. Reserves have to be decreased by 1 lakh and capital has to be increased by 1 lakh. That is what you have to do, shuffling of the net assets. Yeah, decrease the reserve, increase the capital. How that will happen? Really simple. Let's just decrease the reserve first. Now 1 lakh we need, right? So we will take from CRR 55,000. Yeah, let's just see here. Let's take 1 lakh minus 55,000. Okay, we have taken from CRR. We need additionally 45,000 then. So remaining 45,000, yeah, we can take from securities premium 30,000, right? So minus 30, and then we need additional 15,000 after that. So that 15,000 has to come from the free reserves. You can use P&L if you want, or general reserve. Okay, let's use general reserve. Yeah, we have 1,05,000 balance in general reserve, so we need only 15,000, so minus 15,000. This is what you have to do, 0. Yeah, entire 1 lakh you have taken from different reserves by following the law. First you took 55 from CRR, then you took 30,000 from securities premium, and then you took how much? 15,000 was it? Yeah, 15,000 from general reserve. Okay, this way you have to solve the problem. Really simple and straightforward. See here, capital redemption reserve account, debit 55,000. Securities premium account only realized in cash only. That only you can use over here because it's a listed company, right? 30,000 you have used. Debiting means you are decreasing the reserve. General reserve account, yeah, balancing figure, that is 15,000. Fine. So you have decreased the reserves, and that entire 1 lakh value will go into bonus to equity shareholders account. Bonus to equity shareholders account, 1 lakh. Is that clear? This is the first entry. Bonus issue of 1 share for every 4 shares held by utilizing various reserves as per board's resolution dated so and so. Okay. And then the second entry is what? The second entry is you have to cancel the bonus to equity shareholders. Yeah, it was credited over here. To cancel it, you have to make an equal debit and transfer the value to equity share capital account. You have to increase the capital because ultimately what was our goal? Decreasing the reserve, increasing the capital. We have decreased the reserve, value has gone to temporary account, and then at later date you have to cancel this account and transfer the value to equity share capital. Capital will be increased. Is that clear? That is what you have to do. So see here, bonus to equity shareholders account debit, you have cancelled. 1 lakh was credited, now you have debited over here and it has been cancelled, and then the value will flow to equity share capital account. Is that clear? Capitalization of profit. It's capitalization of profit. The profit have been capitalized, it has been converted into capital. Okay, so this is what you have to do. It's really simple, just 2 journal entries and the problem is over, right? And the balance sheet effect is also simple. We'll see some problems after this, okay, in the next video most probably, right? So see, this working note is regarding the calculation of bonus. Number of bonus shares to be issued, 40,000 existing shares, into 1 by 4, or you can say divide by 4 into 1, the same thing. 10,000 shares, and then value of bonus shares. Value of bonus shares means 10,000 bonus shares are there, right? You have to show what is the value. Value means you have to just multiply with the face value, that is into 10, that will be equal to 1 lakh. 1 lakh is the amount now. By 1 lakh you decrease the reserves, temporary account, cancel the temporary account, transfer the value to the capital, right? So this is how you have to do it. It's really simple and straightforward. Okay, now let's move on to the second problem. Now here we have our second problem, illustration 2 from the ICAI study material, and see here we have been given 2 circumstances and each of them we have to solve separately. Okay, it's not connected. Now see here, past journal entry in the following circumstances: a limited company with subscribed capital of 5 lakh consisting of 50,000 equity shares of rupees 10 each. The existing shares are given to you. Okay, the capital is 5 lakh, existing shares are 50,000 and the face value is rupees 10 each. Called up capital 7.50 per share. Now understand, these shares are partly paid up. Now whenever you have partly paid up shares, then you have to immediately understand mostly there will be a bonus call making partly paid up shares into fully paid up, the second type of bonus issue. Okay, you will come to know this. See here, a bonus of 1,25,000 declared, the amount is directly given to you. How much bonus is declared? You don't have to do any calculation. 1,25,000 declared out of general reserve to be applied in making the existing shares fully paid up. You see this line, making the existing shares fully paid up. So this is second type of bonus issue, converting partly paid up shares into fully paid up. So here you have to pass 3 journal entries. Now the sequence of entries will be different from the study material. It is not a big deal. It can happen. Okay, it can happen. But you just follow this way only. Make the final call first. Okay, share final call account debit to equity share capital. Okay, and then use up the reserve and transfer the value to bonus to equity shareholders, and then adjust the final call account with the bonus. Cancel the final call account. Here it was debited. You have to credit and cancel, and then this bonus to equity shareholders also, where you credited over here, that also you have to debit and cancel. This is what you have to do. Make the final call, use up the reserves, and then adjust the final call with the bonus, right? These are 3 entries you have to pass. But very important thing is that you have to know, in bonus call, converting partly paid up shares into fully paid up, here you cannot make use of CRR. You cannot use CRR. You cannot use securities premium in cash. No. You have to only use capital reserve in cash and then free reserve. Okay, that is only allowed in the bonus call. Is that clear? So let's start. It's really simple and straightforward. Okay, you don't have to do any calculation or anything. What's the first entry? First entry is the final call entry. Yeah, so let's pass the final call entry. See here. Now here the sequence is a little bit up and down. Don't worry. See here, share final call account debit to equity share capital account. This is the final call entry. This is the final call entry. Capital has increased and share final call account you have debited. Okay, how much amount is given? Now you don't have to calculate anything. 1,25,000 they have told you. See here, 50,000 shares are there, existing shares, right? And then what's the pending? What is the pending? 2.50. Yeah, 2.5. How 2.5? Because see, 7.5 is paid up. If 7.5 is paid up, then remaining is 2.5, right? So if you calculate that, it's 1,25,000. But it's directly given to you. Don't calculate and waste the time, right? So share final call account debit to equity share capital account, 1,25,000. After this, what you will do? What's our second entry? Utilizing the reserve, using up the reserve. But here we have only general reserve. Can we use general reserve in bonus call? Of course we can. It's a free reserve. So we'll use up the general reserve. How do you use up the general reserve? Reserves have which balance? Credit balance. To use them up, you have to debit them. Yeah, you have to decrease now. So general reserve account debit 1,25,000, and then you have to take this amount to bonus to shareholders, bonus to equity shareholders account. So that account you have to credit 1,25,000. And then what you have to do? After utilization of reserves, you have to adjust the final call with the bonus. You have to adjust the final call with the bonus. So cancel both the things. It's really simple. In the last entry, you have to cancel both the things. Bonus also, share final call account also. But how do you cancel in accounting? You just have to make an equal debit or credit. Okay, see here, bonus to shareholders is credited. To cancel, you have to make an equal debit. Bonus to shareholders account debit 1,25,000. To cancel the final call, you have to make an equal credit. See here, it is debited now 1,25,000. Yeah, you have to make an equal credit. See here, to share final call account 1,25,000. Is it clear? For bonus money applied for call, they're adjusted. Is it clear? So the first circumstance is over. 3 journal entries you passed. First is making the final call, utilizing the reserves, and then adjusting the final call with the bonus, right? Okay. Now let's move on to the second circumstance. Now see the second circumstance. See here, a limited company having fully paid up capital of 50 lakh consisting of equity shares of rupees 10 each. So that's the existing capital. They are saying the existing capital is 50 lakh consisting of equity shares of 10 each. So how many number of shares are there? Existing shares, 50 lakh divided by 10, that is 5 lakh. 5 lakh shares are there. Is that clear? Right. And then they're saying had general reserve of 9 lakh. Okay. It was resolved to capitalize 5 lakh out of general reserve by issuing 50,000 fully paid up bonus shares of rupees 10 each. Yeah. From this line, you can understand that this is which type of bonus? In this circumstance, this is issuing fully paid up bonus shares, the first type, right? So 2 entries you have to pass. Okay, these 2 entries, this type of bonus. and the quantity of the shares under the bonus scheme is also directly given to you. How much? 50,000 shares. 50,000 fully paid up bonus shares they are saying, right? So 50,000 into rupees 10, that is 5 lakh. 5 lakh is the bonus value of the bonus. Okay, so everything is given, you don't have to calculate anything, but still let's just calculate. See what they're saying. Each shareholder to get 1 share for every 10 shares held by him. Yeah, see what was the existing shares? 50 lakh was the total capital, divided by the face value 10. 50,000 were the existing shares, not 50,000, sorry, 5 lakh. 5 lakh were the existing shares. 5 lakh were the existing shares. Now on this existing shares, yeah, 5 lakh, what you have to do on this 5 lakh, you have to calculate the bonus, and the ratio is 1 for every 10. 1 share for every 10. 1 for every 10. If you have 10 shares, you will be given 1 additional share for free. So 1 by 10, that is 50,000 shares. Is that clear? 50,000 shares are the bonus shares. But you don't have to do all this. You don't have to calculate. I just calculated just to show you. It's directly given over here. 50,000 fully paid up bonus share. The value of the bonus is 5 lakh. It's all given. Just pass the general entry. It's a really simple, straightforward question, just for the concept building purpose. Okay. So see here, what's the first entry we pass? The first entry is we utilize the reserves. At the time of announcement of bonus, from the accounting perspective, what we have to do, we have to decrease the reserve and transfer the value to bonus to equity shareholders account. So that is what they have done. General reserve account debit 5 lakh. Yeah, there is no CRR, there is no SP, there is no CR. So directly they have told you general reserve only. There is only general reserve. So general reserve account debit 5 lakh. Yeah, the value of the bonus you have to take 5 lakh to bonus to shareholders account 5 lakh, right? And then you have to cancel the bonus to equity shareholders account by making an equal debit. Yeah, here it was credited. You make an equal debit, it's cancelled, and the money will ultimately credited to equity share capital account. To equity share capital account 5 lakh. Is it clear? So reserves decreased and capital increased. Really simple and straightforward, right? You understood, right? How it happened? General reserve account to bonus to equity shareholders, and then bonus to equity shareholders account to equity share capital. That is how you have to do this. Really simple and straightforward. There was nothing over here. These were just concept building question, just to make you understand how the bonus issue happens, right? So I hope you have got this. So that's it for this video. See you in the next video. Bye.